The British pound has seen a modest decline since the recent highs were put in at 133.5. It's seen a steady decline, and today's UK weakness in the PMI didn't help any, so it continued to push lower as soon as that number came out. Really, it isn't much of a tug of war here. I think a lot of the relief rally we saw leading up to those highs was more about a trade against the euro, and while it was stronger against the dollar, it's more just the idea that I think there were some bad shorts in there ahead of Brexit that are getting out early. Likewise, you're seeing the euro kind of crumble, and the pound is the beneficiary of it. And I think with only 25 days until the Brexit announcement officially comes out, I think market makers right now are probably just taking some chips off the table. Wait and see what happens. I mean, yes, there will be some bets out there, but certainly you don't want to have all your eggs in that basket, given the fact that there still is a tremendous amount of uncertainty as how this will all land. So right now we're seeing a move up to 133.5, pulls back to 131.5, likely on its way to 130, at least, without any sort of bells and whistles. If we get any major catalyst news that comes out, something will change. But ultimately, I think that's where we're headed. And if you look at the BOE, their timing right now of their rate hikes, which would have been somewhere in the May, ballpark, are now pushed out to August, likely longer than that if global growth struggles and if there is a ripple effect from what happens on March 29th. So I think Governor Carney and company really have their hands full as how they're going to handle possibility of a weakening economy, slower growth, and a disruption in the financial system, and basically all services to do with the UK versus the European Union. So right now that all is very, very much in flux and in play. And I think that right now while the Bank of England wants to raise rates sooner than later, that may have to be pushed off until later on in the year, if not till 2020. So right now the BOV on hold likely with the declining euro. What are we getting from the Brexit news lately? Well, we have a big March 12th announcement, or vote, I should say, on Ms. May's plan. Likewise, you continue to see the pound outperform the euro. Now, why is that? Well, why would the euro underperform? Well, simply because the euro is seeing weaker growth, seeing weaker data. They have an ECB meeting this week, which will probably highlight that, which will continue to see the pound outperform the euro, at least on the shorter run. But ultimately, when it comes down to it, all this is going to change on March 29th. So anything we see leading up to, or anything we see, in the weeks ahead, are really not going to matter in the day or week after if things go the other way. So right now, I think that you're going to see risk takers be playing this game all the way up until March 29th. But ultimately, whether or not we see new highs ahead of the Brexit, whether or not things make a big move lower before Brexit, it all comes out on March 29th, and that will be where the new starting point is. Whether you're talking about the euro and the pound and the dollar, whether you're talking about the pound and the euro, it'll sort of reset on March 29th, and that's 25 days away.